You can see the screen okay? Brilliant. So, okay, folks, as per usual, this is more for Q&A. So please jump in. Any question you have, it's important because I guarantee you somebody else probably wanted to ask it but didn't think of asking it. So what I'm going to just do is start off with a little rundown on SPY, where the market is at the moment. Michael has already asked me to just do a quick example on IG index of placing a couple of trades, so I'm going to do that as well. But if you have any stock-specific questions or option trade-specific questions, it'd be great if you could get in earlier rather than later on that, and we'll focus in on that, and then I'll do a little bit on the IG index platform thereafter. Is that okay? Okay, so just looking at SPY, guys, you can see pre-market here, we're up 1.3%, pretty much off the back of NVIDIA's earnings. So if you know, everybody was kind of holding their breath, you know, the narrative that was starting to emerge was that the AI trade is coming to an end. And of course, NVIDIA now poured a bit of cold water on that. They basically said that they don't see any weakening in demand whatsoever. And I think there was one comment where, in terms of anticipated future sales of the Blackwell chip, they basically, I think the CFO turned around and says actually they expect to beat their expectations. So that it was when that comment was made, and after hours trading, literally the stock took off then. So in pre-market, NVIDIA is up about 5%. We'll see, does that hold? You know, like, it wouldn't surprise me if throughout the day a lot of those gains were given away and the market doesn't end up as much, but we're just going to have to wait and see. So my own opinion, just generally speaking, with broad brush stuff, I think this is just a healthy pullback in the market. It still wouldn't surprise me if we make another attempt at the recent low, even though the market's up 1.3% today. So over the next few days or even a week or so, it wouldn't surprise me if we trying to take this low here. It wouldn't surprise me at all. But by the end of the year, I actually expect the high to be taken out, or even tested up here, and possibly we finish closer to 7,000. And the reason for that is, folks, barring any negative impact or any news from the US economic side, you know, we're getting a lot of data that's going to start coming our way now that couldn't be produced because the government was shut down. So let's say the jobs data, for example, is gone off the charts or something like that. That may cause a bit of a wobble. But other than that, I'm not seeing a lot that could bring the market down, except for Bitcoin tanking further. And I know that sounds a bit strange, but if you look at Bitcoin, it's had a fair correction. We spoke about this before. It's down from its peak at the minute. It's down 29%. And I think that could add another 10% lower if it does so. And again, just the knock-on impacts of that into stocks and equities is, if, for example, I want you to imagine you've traded on leverage on Bitcoin and now the backside is falling out of it. All of a sudden, your broker is issuing you a margin call saying you need to sell stuff here to maintain your position. So you're faced with a choice. Do I offload my Bitcoin, which you're probably losing that? And most people psychologically don't want to do that. They want to stay in the game. So they start selling some of their stocks to keep their position. So there could be margin calls going on at the moment. So just be aware of that. And then again, I kind of put it out in my note earlier on. You may not have seen it. I just want to show you a company called MicroStrategy. All they do basically is buy Bitcoin. And look what's happened to their share price since it peaked in July here. It's down 60% in a matter of what, 3 months, 4 months? So that's kind of the volatility you're dealing with in that, and how exposed people are. So you probably have a lot of people here who were long on leverage, and when it started falling, had to force sell. So you know, this can have knock-on impacts into the market. So broadly speaking, on the S&P 500, my message to you is my best case is, or my expectation is, we actually go higher by the end of the year. But in the very near term, wouldn't surprise me if we have another little bit of a shakeout. Okay, the only thing I think that could change my mind on that is if some of the economic data that we didn't get in the last month or so is so bad that everybody's point of view on the US economy changes. But it's hard to see that has happened. based on some of the earnings numbers we've seen. Okay. So with that in mind, just jumping into our positions. So if you look at our short put here, these unrealized P&L positions are based off yesterday's close. So they're not taking into account today's upswing. So this short put is going to go into significant profit today again. And again, just to remind you, the probability of that trade, 92%. So that's why I love that trade. Statistically speaking, you have a serious chance of making money. And it's stress-free trading. So you can imagine, people who may have been kind of extremely long in the market recently, and there was a bit of a pullback. If people watch it daily, it can be very stressful like that. Whereas if you looked at what we were doing, which is really pretty much saying, yeah, you can fall all you want, just don't fall down below here. And we know statistically speaking, that's not likely to happen. There is a 10% chance of happening. And we know that 1 in every 10 of these trades we're going to end up managing, but it's not likely. Okay. So it's just important we mention that. Any questions on the short 620 put at all? Is there anything there outstanding on it? Or in SPY in general? Okay. And the ratio put spread side of things, I really wanted to, and if you've got the ratio put spread on, and I know there's going to be people listening to this who haven't got a clue what a ratio put spread is. We have a course on it, but just to put you in the picture on it, we bought a put option at this strike here at the 660. So when you buy a put option, you want the market to fall. You're basically buying the right to sell SPY in this case at a price at some date in the future. It's like buying an insurance policy. So if the value of the asset tanks, the value of that insurance policy goes up, right? But at the same time, what we did was we sold an insurance policy at the 650 strike below it. So one of those, if you did those 1:1, that's what they call a bear put spread. It costs you money to put on. And literally you make a profit if SPY drops below 650 at expiration. And our expiration date was December the 19th. But what we actually did was we sold twice as many at this strike. And that's because we have a bullish bias. So even though we felt, there might be a short-term correction, but we think the market is going to go back up after it. That's basically what that trade is looking to do. And the great thing about it was we established it at a credit. So we actually generated over, I think it was $400 or $500 in premium on that trade, which means that if SPY doesn't fall, we make money. If SPY goes sideways, we make money. And then if SPY does fall, but it doesn't fall below 635, that's where our break even in that trade was. We make money. And that's why statistically, again, that had an 87% chance of winning. So what I put out in my note yesterday was that I felt, and I'm going to just share this with you, and please jump in and ask any questions. If you have a question, just unmute your microphone. But what I was trying to take advantage was the VIX, and it's very important that you understand what the VIX is when you're trading options, because it's your best friend. And what I mean by that is when you see the VIX spike, so the VIX, first of all, it's a measure of volatility in the options market. But when you see it spike, it's usually a really good time to buy the stock market. Now, the question is, what defines a spike? Let me go back here to March and April. That's where the VIX got to. But don't forget what was happening. This was Donald Trump basically ripping up the entire trade agreements of the world. And nobody knew what way he was going to impact equities. But see how quickly it unwound itself. And if you actually looked at the correlation between the S&P 500 from that point to here, you'll see it rallied quite a bit. A more normal spike is something up around 30, between 30 and 40. And that's where I was kind of getting to yesterday. We were getting towards 28, which was the previous spike. And I was saying this is actually be a good time to sell the insurance contract, because when your volatility has gone up like this, the price of your option goes up too. So remember the elements of an options price. You've got the real value of the option, but you've also got this thing called extrinsic value or time value. And volatility is a huge part of that time value. And the more volatile the market is, the bigger the premium. And That's what I was looking to do yesterday. I was saying, do you know what? If this continues and we see the VIX start to spike even more, and possibly get up to this level, what I was going to do was actually sell the $660 put and leave the 2 puts there underneath it naked. Now, that trade wouldn't be for everybody, right? That would be for somebody who's experienced and comfortable managing risk on the S&P 500. For people who weren't, it was simply leave the trade on, or you could have rolled out 1 or 2 of the contracts, whichever you decided, okay? Now, today, because we're up 1.27%, the value of that put option is going to drop dramatically. So I'm not going to take any action on it today, because my belief is that there's a possibility we might get a little retest down here. And I'd rather obviously sell it on a retest. And if the case is that it doesn't and the market just shoots on up from here, I'm going to make money anyway. So I'm just going to be a little bit more patient on that. Does that make sense to everybody, or has anybody any question on how you'd manage that raise your put spread?
Stephen, it's Stephen Gavin here. Can you hear me okay?
Yeah, hi Stephen.
Great. Come here, tell me, you mentioned something about the 660. You said you're taking advantage of the spike in the volatility, and you say you're content to look at the 660 and then manage it thereafter if it goes south.
Yeah.
I mean, that's pretty close. Could you just tell me what's in your head when you're doing that? What are you thinking? I mean, that's obviously you're going to have to be, right on it. You're watching it literally second by second. You're glued to the screen. How does that work? What would you be doing in that instance? I'm just curious. I don't mean to take the momentum away from the discussion, but what are you thinking like that?
It's a great question. So what I'm thinking, Stephen, is that I'm not. So when you own a put option, you're bearish. You want the market to fall, right? So owning that 660 put on its own, forget about these 2 short puts underneath it for a minute. We'd want the market to continue to fall. And then when you think it's fallen to its bottom, you'd sell it, right? And take your profit off the table. So really what I'm saying is that my belief is that the market's actually going to reassume its rally towards this kind of high area here. And what I'm trying to do is maximize the value I get out of that 660 put. So if I just go into an option chain here for a second as well, if you look at, again, and it's important, you don't have to be a master of these Greeks, by the way, right? But it is important that you understand what they mean. So if we look at, for example, the volatility here, the Vega, right? What we're trying to take advantage of, when the IV goes up, we're looking, the option premium is at its greatest, okay? So I'm trying to take advantage of the IV, the implied volatility increase. And by selling it when the implied volatility is high, I'm getting the best bang for my buck, assuming the share price of SPY doesn't continue to tank. So my mindset has to be, I don't believe SPY is going to continue falling. And if it does, I have to be comfortable owning, in this case, the naked puts underneath. I would have to be very, very comfortable with that. So my mindset is, if I'm going to close down the long put side of this trade, I think this sell-off is coming to an end. And the reason I'm saying that, again, I relate it back to the VIX. If you actually come back to this and watch it, when you generally get spikes in the VIX, it's usually followed by a rally in the market. And you're already seeing a drop off in the VIX today. You can see that's the VIX today versus yesterday. And look what's happening in the market. We're up 1.3%. So that's what I was kind of assuming. Plus, my own opinion of the S&P 500 is we're going to be up by the end of the year. So 100%. I want to try and participate in that as well and maximize my profit if possible.
What kind of time frame? How far are you going out with that? Because it's ballsy, isn't it, to see the arse fall of the market and want to be selling the 660? I'm just how far are you going out, or are you ready to?
No, I wasn't going out. So all I'm doing is managing an existing trade, Stephen. So the existing combo trade here, we've got the let me see, can I just break it down here? We've got this 660 put. So you can see at close of business yesterday, we were getting 13.20 a share on that. Now you can look at where we're at. It's at the money, and it's a lot of time premium. And what I was saying was, it'd be nice to just bag that, because if we do get a rally in between, the value of this is going to dissipate quickly. you know,
Absolutely.
and that's what I'm trying to do. So what I would remind everybody as well, first of all, it's the S&P 500. So you're broadly diversified. You know, there's people out there trading hundreds of thousands in Nvidia on its own, which I think is, whilst they've probably done okay and done well, it's nuts, because anything can happen with an individual stock. This is an index that I will be happy to own over a period of time. Yes, you're going to get sell-offs here and there. They come, and there will be more to come. Always happens. But generally speaking, the index is built to go up. So that's my first safety net on this, Stephen. My second safety net is, I suppose, my belief in the US economy remaining healthy and strong. We've also got seasonal factors at play. Historically, between now and Christmas, the market tends to do okay. So there's a lot of factors, and I still have statistics in my favor. Because if you think about it, if I sold that yesterday at 13, that means that if I did get a sign on this, ultimately my break even is still at 637.
Still way low, yeah.
So I'm kind of still putting the laws of probability in my favor. And there's times to buy, there's times to sell. And my own view is, whilst I don't think the market is cheap at all at these levels, I'm not saying it's cheap. I still believe that the AI trade is not necessarily over. And I still don't think people understand what's coming in terms of technology change. There's companies that are out there at the moment, in my opinion, that we haven't even heard of, that are going to be huge in years to come when quantum computing comes on stream. And the efficiencies that are going to be gained from AI, I think are going to be off the scale. And therefore, my own view is this bull market in the S&P 500 is not over and won't be over for years unless we get a recession in the US. In my opinion, that's the only thing that stops it. And it's hard to see that at this moment in time, but you just never know. But even if I am wrong, I'm going, you know what, I'm okay. I'm happy with enough with holding on to the S&P 500. Plus, I can also, if I wanted to just treat it as a return-based strategy, I could always roll out those puts and down the 650s. If I felt, oh no, they're getting too tight now, I just roll them out and down to January to much lower strikes. So there's a lot of evasive action I could take here as well.
Yeah. All right. Thank you. Fair play.
Okay. Does that answer your question, Stephen?
It does. I have something else, but I want to let you move on though. But I might talk to you again shortly. All right. Just carry on for now. I'll let you at it.
Yeah, no problem at all. No problem at all. Just switching over to the IG index platform here, just to show you from, and this is really just for people based in Ireland and the UK. Now, by the way, for people who are abroad as well and are looking to day trade the likes of gold and stuff like that, I think it's a much simpler platform to use. That's just my own opinion. But if you wanted to trade the options here, for example, through IG index, you go to your spread betting account, you click on options. Now, these are structured as a bet. So there's no assignment of shares or anything like that on this, right? But the profit and loss is similar, depending on your bet size. Your probability of profit is similar. So, for example, if we chose, they call SPY the US 500, right? And if we went to the December expiry, okay, we could go down here. Let's look at the 6200 put here, for example. We know the probability in this trade is about 92%, right? So what you do is you click on sell here, but now you're betting. The difference is with interactive brokers or in any main option platform, right? You buy and sell options and contracts, and one contract controls 100 shares of stock. So the multiplier is 100. Here you're choosing what your multiplier is going to be. And what you're betting on here, you're betting on, let's say you bet 5 here. So your income on this will be 5 times 2582 here, right? So you're betting 100, or your max gain is going to be, let's say, 140 or whatever it is. So long as SPY finishes above 6200 at expiry, right? So if SPY stays above 6200, you bag your full profit. And what they set aside here is this margin. Now, you're not paying interest on this margin. There's no other financing costs on this. This is pretty much them saying on this account here, which is only worth 11 grand, right, that we're setting aside a tenth of it to maintain this position. And that's all it is. There's no cost to that at all. but your probability is still 92% of making that €100 or whatever it is you're betting. If you bet more, look what happens. Your margin, it goes up again. It's gone up now to 2,900, for example. So, but this time you're making 10 times your 25 here, so it'd be €250 or whatever 10 times that is. Okay, so it's as simple as that. It's the same as a short put on a traditional broker. The only differential is you're not getting assigned the shares. If it gets to expiry, you're either going to be in profit or loss. End of. There's no assignment of shares. If you lose, you lose. If you win, you win. And it's as simple as that. And
what's
you can
the
also,
exposure? Sorry, saying what's the exposure there? I mean, I don't see what's the loss if you sell that.
Okay, so the loss will be, so first of all, it's a great question, right? So let's say we did this trade here, Philip, right, of 10. So they're getting you straight away in the spread here. See the difference in the spread, right? So if I put that trade on, I'll do it now. I'm going to go straight into a loss on this, because if you think about it, if I sell it here, I'm going to have to pay this to buy it back immediately, and the differential times 10 is what I'm straight into a loss on. So that's the deal confirmed. I'll show you what the position looks like. So I've lost $15. That was the spread. That's ultimately what they've made off me, right? Now, let me go back to the position on this. You only lose on this particular trade if that's the price of the option. Let me go back to the index itself. So you only lose on this, Philip. So let's say it's the price of the option multiplied by your multiplier. So if for example, SPY starts diving, right? Let me get this up again here. So let's say SPY starts falling drastically in the next week, right? Obviously, the values of these put options are going to go up, aren't they? Like they do in any options market. So let's say they went up to 40. Well, 40 times 10 is 400, right? We put down 10 at 26. So to buy ourselves back out of it, we're having to fork out more capital. Does that make sense? So as long as you get to expiry, and that's above 6,200, there is no loss. You've just made 10 times your 26, €260. But in between now and then, as option prices are moving up and down, you're making profit or loss, right? Now, the big key here is implied volatility. And that's why I'm saying, looking at your charts, I'm looking at the VIX. Yesterday was a great day to put that trade on, and the day before, because the option premiums are at their optimum when implied volatility is high. In other words, when we sold this, let's say a couple of days ago, that premium would have been much higher. Okay, and now we could have bought it back cheaper today and walked away with a profit just from the implied volatility crush. You know, so the principles, guys, are exactly the same as a traditional broker, as your traditional options. The principles are, we don't want SPY to fall below 6,200. It's just structured as a bet. That's the difference. That's the only difference. This is structured as a bet. And unless you really want to take assignment to the shares, so if it's something where it's not a return-based strategy, I actually want the shares, well, then do it in a traditional brokerage platform. But if you actually are using it as a return-based strategy, if you're in the UK and Ireland, it's a better platform to use. And I would argue as well for people outside of the jurisdiction is that, you know what, maybe you've got a small account. Let's say you have a 10K account and you don't want to sell a put on SPY and be exposed to $60,000. You can actually do it through this. Think about it. We only had the deposit margin there of $2,000. You could decide what your margin's going to be on that. So it allows people with smaller accounts trade it as well, trade those puts. So I would probably argue for people with smaller accounts as well, it's probably a better platform to use.
So, Stephen, if I may, just from talking for my own sake, I have IG, but as spread betting is seen as gambling, and I'm over here in the Middle East, Allah is not so forgiving, so they don't actually have that as an option for me here. So I have to trade the CFDs, which is a different, well, similar animal, I suppose. But if I'm going to do that, I might as well do the interactive brokers. But I feel like I'm missing a trick here with the IG index, because you're using it, and it's if I see you doing it, then I can follow along easily. Otherwise, I have to interpret it, and I haven't quite embraced it yet. So, do you have any course on it or something, or do you want to do a sit down with me on it, or how would you
On
I know, 'cause
IG
you've done it-
Index, Stephen, is it?
Yes.
Yeah. So there's actually I have 2 new clients as well who actually are Muslims, and they were actually telling me about the issue with interest. So I fully
Gotcha.
understand that. What I would say to you is, if you want to do it, there is courses there. If you go to the Share Navigator website, for example, you can go here, just click on spread betting courses there, and you're going to see access to spread betting, or just go to the knowledge base. So if you're the knowledge base, there's a link from the website as well, and there's our spread betting courses, and it goes through each one and different examples of actually how to place the trades and stuff like that.
So okay,
So
great.
I'm going to put a link up to a demo account before I finish, guys, and you can open up a demo account and practice away and see what you think of it.
So I might even get out of it, close down the IG and start up again as Irish, because I have an address back home and all that. Thing is, I'm not resident back home, and I'm sure they're gonna want to know what's what. I'm sure it might raise a flag. I'm not sure. I'll have to look around it and see what's what.
I just think it's simpler for people, not necessarily for me, because I trade daily. That's what I do, right? But for let's say people have got other things going on in their life, I'd be kind of saying this is a simpler platform to use, even kind of day trading the gold, which I'll go through now shortly. It's just much simpler. Like, it's easier to place the trade. It's easier to know what you have at risk, and you can place everything and walk away from it. So for me, it's easier, but that's for people who are day trading and maybe have smaller accounts. People who are not day trading and are not looking at return-based strategies with the short puts, in other words, they don't mind getting assignment, probably lean towards interactive brokers.
All right, I've got homework to do.
Yeah, just on that IG, Stephen, there's not real managing of the position then. I mean, once you put it on, you just walk away, as you say, and you take your profit or you take your loss when the time expires.
It's a great question, Philip. So let's say, I want you to imagine now, right? We're nervous now. We don't like this anymore. We've changed our mind, right? You can roll this out like you roll it out in a traditional brokerage platform. So what we would have to do is buy it back at 27.95. Can you see that there, right? So let's say we've changed our minds. We're buying it back and we're walking away from this trade. But let's say we still like the idea of generating a credit and we don't want to take the loss, right? So what we would do then is be looking at, well, what are the options on SPY for January? And we go out, it's like a roll here. So where down here do I get 27 in? And as you can see here, we're rolling this down to around 5,850. Does that make sense to you, Philip? So
definitely, yeah.
We've got, so you're rolling out and down like you're doing any put option contract. So now if you're okay with the S&P being down pretty much 17, 18% in a matter of a month or two, and we know statistically there's less than a 1% chance of that happening, but if it did happen, we could manage that position. So what I want you to take from this is, if SPY, for example, got to 6,300, what you're going to see in this position is it being down quite a bit, right? But what you would do is you would buy yourself out of it and then open up the January contract and roll it all the way down to a much lower strike. It's as simple as that. And so it's no different than rolling out and down, and that's your risk management plan, And I'd always encourage everybody, when you're doing this, have a risk management plan, because if you're going to do the short puts and IG index, it's not you're not looking to take assignment, you're looking just to make money and walk away from the trade. And it's as simple as that. So if it starts going belly up, you want to manage it and manage your risk. And always remember, at the end of the day, it's the S&P 500, and you have a great advantage of statistics being in your favor here. Don't, because again, what I'm talking about here is I've done a statistical analysis of the S&P 500 for over 50 years, and I've established, even through all of the crashes and everything, that statistically speaking, you have less than a 10% chance on a monthly basis of the S&P 500 been down 5%. It's a statistical fact. Don't get me wrong, we've had COVID, we've had financial crises and stuff like that, and they will happen again. And as I said, it's in that moment you want to know that you're well diversified. And that's why I love doing it through the ETF, which is the S&P 500, okay?
Perfect. Just an anecdote, Steve, and Warren Buffett has in his will that anybody in his will that's inheriting, they can't trade individual stocks. They can only trade in the S&P 500 or government bonds.
Really?
Yeah.
Well, that's interesting. That's interesting because I'm one of his best mates and he has me as well.
There you go.
I wish. That's brilliant, Philip. No, it's built to go up. I can't stress this enough. It's built. Think about what happens with the index. Non-performing companies are thrown out and replaced by companies that are hot. It's actually built to go up over time. It doesn't mean you're not going to get shakeouts. You always do. Look, there's March. That's the beginning of last year to where it ended up. You know, it's usually the best time to buy. It's very hard to do it psychologically, by the way. It's really difficult. I understand everywhere you look. What happens with media, of course, they're there to sell advertisement and they'll roll out everybody who told you the market was going to fall at that exact same time. So all you're getting is negativity in the markets. Very rarely when the markets are going down will you get anybody telling you, actually, it's going to reverse, you should buy in. And vice versa, when it's going up, we've all the people who told you, why the market was going up. So
yeah, it's always after the fact as well.
I get a call, Philip, at least twice a week from people. I'm after reading this article, Stephen, and whatever index is pointing to a sell-off in the market. And then it's normal for people to get anxious with that. But as I explained to them, that guy who's saying that has probably posted that every month or every week for the last 5 years. And eventually he's going to be right. And they're hoping to make their few bob out of that one time they're right. So you've got to be very careful what you're reading and what you're listening to, in my opinion.
100%.
Okay, guys, any other questions on SPY, how we're managing SPY? Okay, no, just quickly, just while it's in my head, Meta obviously is going to get a bounce here from NVIDIA's. So we've bought Meta recently there, good long-term play. Again, just to remind you, if you haven't bought into it, I think it's a good stock to buy into myself. And the reason is this is getting punished because of its capital spending on its earnings. It's not because it was underperforming or anything like that. We've seen that story with Meta before. And actually, when I was suggesting we invest into Google, you know, earlier on in the year, and we got into it, I was saying it's the most undervalued company out of all the Mag 7. I think Meta is now that animal, and I think it's cheaper. In my own view, you're going to see that probably at $1,000 at some stage. So I'm not saying the bottom is in it by any stretch of the imagination. When you're buying stocks, guys, you invest in it for the long term. So you're not in it to kind of just, you got to just go with the punches at sometimes, you know. It could make its way down to 500, but it's cheap here. And if it fell to 500, I just buy more of it. So just a quick word on Meta.
Is there a call you could do on it? You know,
there is a call, Michael, there is. And now there's only one problem I have with call options, Michael, right?
Yeah.
They're time wasting assets and you're paying for time. And whilst don't have as much of a capital outlay, the challenge you have here is that you need Meta to move within this time frame.
Yeah.
So we would recommend going out about 90 days on a call to give yourself time for it to work, and having deltas at about 0.7. So you're looking here at the 550 strike on Meta, right? Which is going to be more expensive than a traditional option. That's going to cost you about $7.5 for a contract, right? But if you look here, our break even on this trade would be $625.98. So Meta has to rise $24 from where it is now at expiry just to break even. Now, it's not a lot, it's 4%, right? But it just goes to show you that's why your profit probability is at 41%, because the break even is higher than where it's currently trading at. which means that we got to make some ground. Now, if Meta rallies in the next week or two, you're going to make money on this call. It doesn't have to get to this break-even point. That's not what I'm saying. This is assuming we're at expiration, and there's no more time left in this call option. That's where it needs to be over for you to make money. So that's the only downside of it. But there are, you know, I bought a put on Nvidia recently and sold it a couple of days ago. Didn't fancy holding it through earnings, and made a few quid on it. So it can happen if you're right, you know. But just that's the only downside, is this time premium you're buying, you know.
Yeah. Well, then if it did rise, say $10, $15, would you not do a covered call in it to offset some of the cost?
You could sell, turn it into like a bull call spread,
Yeah.
or do covered calls on it. There is another issue with that, Michael, right? The time value in the shorter term options are greater, and they tend to decline at a more rapid pace, right? Which is great for you. But if the stock rallies through your strike, so let's say you bought the 550 call, and then at the same time you went out monthly and sold, turned it into like a cover call, and then let's say you sold the 620 call, the stock might rally and you could actually lose money.
Yeah.
Because of the way the time premiums are different in both of them. So you just need to be very careful of what time premiums you're talking about here as well, you know. Whereas if you did them both, just turn it into a straight bull call spread, you've nothing to worry about. The only issue with the bull call spread then is there's always pros and cons. Let's say Meta jumped 10% tomorrow. Your bull call spread will go into profit, but you won't be anywhere near as much profit as if you just had the long call on itself.
Yeah.
So trade-offs, they're all about trade-offs, you know. That's Meta, guys. And then gold. So like been trading gold recently, and quite a lot, and it's worked out quite a bit. So just kind of my day trading rules, if you are going to day trade, is you got to establish, first of all, what is the longer to medium term trend. And you can see with gold, obviously that bullish trend was substantial. It's not necessarily over either, by the way. It's just taking a little breather, gone sideways here. So you have that in the back of your mind, that probably, whilst we're correcting at the moment, the longer term bias is to the upside. It's not that it's going to matter greatly, because our average holding time in these trades is 2 hours, right? But I still want to know, you know, medium long term, where am I? The second thing, as I said, you check the news flow. What's coming out today that could impact the gold? Now, the jobs data coming out of the US, everything like that, will have an impact, because it moves the dollar. And if gold is priced in dollars, obviously there's could be a knock-on impact in that. A weaker dollar usually means higher gold prices. So then what we do is we go into our 15-minute chart, and now it's really all about RSI, the relative strength index. So just a reminder what that is. That's just an index that it measures the relationship between, over a period of time, the gains versus the losses, or the down days, and they measure the ratio between the two. And the resultant index is on a scale of 0 to 100, and anything over 70 considers it overbought. In other words, it's more likely to come back. And then if it's below 30, it's considered oversold, which it's more likely to rally back. It's not an absolute guaranteed indicator, guys, by any stretch of the imagination. So that's where your risk management comes in. So what I have in here, this is TradingView, but they have it in IG Index. You can have it in Interactive Brokers. I've got an alert system set up here. So if you look at my alerts on gold, I get pings on my phone and everything. Too many beeps going on, to be honest, because I've set alerts on every platform you can think of, and all of a sudden the phone goes nuts. But anyway, I've got a 15-minute here. If I show you, if I edited this, I can show you. It said, tell me when the RSI value on the 15-minute window is below 30. So I don't have to watch the chart or anything like that. So there you go, guys. There's an example of gold futures changing. Look what's happened there. We've got the announcement out at 1:30. The announcement is out on non-farm payrolls. So look at the volatility in one trading candle there. That's what I'm talking about, the news. You kind of avoid trading this around the news for a while, okay? You let it settle down. But anyway, getting back to my alert. So I get an alert when it gets overbought or oversold. And then I look in and I check straight away, is there anything happening that I don't know about? And if there's not, I put in my parameters. So I think what I'll do is I'll jump to IG index here just to give you a little taste of what I'm talking about. So if you look at gold here, I have the window split into two. That's my daily, and this is my 15-minute window. I'm looking at here, and let's say I'm using this as an example, right? And I wouldn't trade this now, obviously, because there's data just out and the thing is moving quite a lot. But let's say I just want to demonstrate. Let's say I was going to sell, and let's say this RSI was at 70. So what I'm looking at now is my risk management, first of all. Forget about everything else, because this is a bet. This is not an investment. This is a roll of the dice, and we're trying to put as many odds in our favor. And then we're trying to limit what we're going to lose. So the rules on your account should be, on any one trade, no more than 2%. If you get into a 2% loss of the value of your capital, you're gone. So let's say this is a 10K account. You can only lose 200 quid on it, right? So I'm looking at my stop, and I want my stop here to be above a recent high if I'm shorting it. So remember, when you short it and the price goes up, it starts losing. So I'd love my stop to be above this area, you know. So we'll see. So let's say I'm putting a 5 bet on it, and I'm going to put my stop at 40 points away. You can see what the chart is nearly. It's a great little feature. It's telling me where your stop is going to be, and it's at that previous peak. Okay. And it's telling you here at a €5 stake, I'd lose 200 quid if that happened. Now, if I change the bet size to 10, I'd lose 400. That's way above my maximum loss per trade, so I'd have to bring my stop down to 10. And I'm not as comfortable with that. So if I was trading this, I would reduce my bet size and increase my stop loss so I can stay in the trade a bit longer. And now all I'm looking at is, oh, I want to make my gain. Now, I've got a little rule. It's just a 10-point move. It gets me down to my RSI being at 50. Now, if you've got time to look at the system and look at the trade, wait for RSI to get to 50 and then close it out. But I know I'm going to make 50 quid on here if gold pulls back, whatever. And at the moment here, it's 10 points, and it's telling me I have a margin allocation of £1,000 on this. That doesn't mean I'm betting £1,000 here, guys. It just means that out of my account, they're not going to allow me trade with €1,000 of it. They're going to keep reducing. So my funds available here will go down. So see, it's at 8937 up here. I'm going to place this deal. Watch what happens. My funds available, they're gone down to 7915. So it just doesn't let me get overexposed. So that's that trade in there now on gold. You can see our short put has gone up. The volatility is obviously coming in, which is great. We've gone up in gold. So all we're looking here now, that trade is in. I've got my stop loss in. I've got my profit taker in. I just leave it alone. And then if I get filled, I get filled. So we've had a great run on this in the last couple of days. We've had 5 or 6 trades on this, being very, very profitable. But I do want to emphasize, it's not investing as such. You're literally day trading. And when you're day trading, you've got to roll with the punches. You're going to do well some days, and other days it's not going to go your way. And that's just the way it is. But you put as much in your favor as is possible. And the big thing is, don't trade around announcements. So I would never put this trade on, today, at this moment in time, especially. Just wouldn't do it, because you're asking for trouble. It's very volatile. You let the news settle down and take it from there. Okay. So that's all I wanted to cover today, guys. Throw it back to you for any questions you may have. Is there anything there you need me to cover?
Just one there, Stephen, on the IG with the 500. If you were going out, say, a week in the IG platform, how close to the current share price would you trade?
I would keep it as far away as possible is the answer. So let's go to, what day do we today? There's one that's a week, the 28th of November. Okay. So obviously you're not going to get the same amount of premium in,
No.
So what I would do here I would go, statistically speaking, that this is the negative of this platform. You don't have your delta or your probability calculators. But you could always use the dummy account and interactive brokers, or there's loads of things that can give you your thing. Let's say you choose 6,500 and you're putting a fiver on this, right? So let's say I'm going to sell and I'm putting a fiver on it. We can see here, like, there's a fair amount of margin set aside, but I would certainly have my risk management plan in place, my roll out and down. Remember we discussed that, Michael?
Yeah.
I'd be saying, right, if SPY gets to, let's say, 6,550, in and around there, I'm rolling that out and down. I'm not waiting any longer. So then I would go out, maybe say, let's say 3 weeks, and say, where can I roll that down to? You know, and we know already we can get it out to December the 19th and take in a hell of a lot more, over 20, you know, at 6,200, you know. So I just have my risk management plan in place. I'd have no problem doing the weeklies on this. You're going to be a lot closer to where it is right now, but the trade is over quicker. I suppose that's the upside of it, you know.
Yeah.
But have a risk management plan in place.
We're very similar then to rolling out the and the interactive brokers platform, except it should be trading at a lower price.
Absolutely, 100% correct, Michael.
Yeah, got it.
Okay, guys, so that's it for me. If you want to jump in with any questions before I finish up, please. Market's looking like a nice gain today, 1.5% so far. Obviously, whatever non-farm payrolls came out at H1 hasn't impacted the market at all. So that's positive. So all of our option trades are going to do really, really well today. So happy days. And yeah, I'll let you know if we decide to trade gold at any stage. But I said I'm going to let that lie for another hour at least. Let that earnings or that information sink into the market.
Okay, Stephen.
Okay, guys, thanks for tuning in. If you have any questions, reach out to me on WhatsApp or through the chat function on the website. Okay.
Thanks again.
Thank you.
Bye-bye. Bye-bye.
Bye-bye, guys. Bye-bye.